whatever you would like to call it. So when it comes to the forex market, I want to talk about the market basics. Now I want to talk about things such as I guess you could just say sort of a reality check, right? So some of the things on here might be a bit clickbaity, but let's jump into it, right? So before beginning your trading journey, it's very important that you understand the basic concepts, right? Obviously you're probably a bit more advanced when you click on this video, and that's cool, that's awesome, because obviously I don't really teach the absolute beginners. However, this is something I will look at in the future. I've been humming and hawing about it. I just feel like the information's out there for free, so I'm not going to charge you for it. So maybe I might put it under the advanced course, I don't know. When it comes to trading forex market, we must understand that it has over literally like $6 trillion a day go through it, which is insane. And you know, as a human, you'll have so many different emotions to just deal with. The majority of the market is literally, you know, controlled all by these algorithms, right? These banks, hedge funds and stuff like that, most of them use quantitative trading, right? So when you think in terms of, okay, there's $6 trillion going through the market a day, the computers has loads of different algorithms and stuff like that, and you as a human have emotions, right? As a computer algorithm, they don't have emotions. So in terms of competing or going to war, you're essentially going to war with a robot. They have no emotions. All they have to do is click buy or sell, what they're programmed to do. They have no emotions. Whereas you as an individual trader, you will have emotions. You're sat here clicking the buy and sell button. The computer's not doing it for you. You're literally up against the best and the smartest people in the world. The market is 100% rigged. It doesn't mean it's a scam. It's rigged against you and designed to make you lose. To me, it's a zero-sum game. There's zero probabilities. I'll talk about probability in a minute. It's a zero-sum game, right? If you win, you pay the broker who pays the bank, and if you lose, you pay the broker who pays the bank, right? Who also profited off your loss. So, win or lose, you still pay your broker. When it comes to the markets and designed to make you lose, this is an argument that will forever last, right? To me, I feel like there's a 50-50 win rate in the markets, no matter how you trade. And the reason for that being is simply because, yes, the market's created and it's made for us to lose the majority of the time, but the people, banks and investors, if they made everyone lose all the time, well then no one's going to want to trade it. No one's going to want to invest their money because there's no reward, right? However, if you give someone a couple wins here and there, you know, you buy from support and it works sometimes, that's okay, because the market, they're telling you that, you know, you can win in the market. So people are obviously going to risk their money. People are going to invest their money into the market because they know there's a chance of that reward. And this is something that will forever go on and continue to argue about. But a lot of people won't agree with me. They'll say, you won't make money. It's a zero-sum game. But for me, I feel like you will make money no matter how you trade. If you buy from a support randomly sometimes, or sell from a resistance randomly sometimes, well then yes, it will go to plan sometimes, because the markets are going to need people to win, because that's how they're going to feed off your money and your stop losses, because it's liquidity, right? Don't worry, I'll touch up more on this down the line, but it's important that you understand that no matter what story you choose to believe, is that you just got to think in common sense, right? If the market's made for us to only lose money, and essentially what it is, and never win a trade, well then how are people so stupid to invest their money, right? Surely they have to make someone win sometimes. Like for example, when you buy from a support zone or sell from resistance level, yes, the first 2 times might not work, but the third time that you come to do it, it may work, right? And this is why, to me, I should have added on here, risk to reward ratio is people's edge in the market. And when we trade supply and demand smart concepts, we will be able to overcome the win rate and the risk to reward, because our risk to rewards are pretty big, right? For me, I think this is a very great way to trade. As even though it's becoming more popular and more popular, it's still a great way to trade, right? Inducement is all the new hype. It's all the new thing, and I'm going to explain inducement down the line in the course. But just understand that the market is win or lose. You pay the broker, so they ain't going to sit there and take you out the trade for a laugh, right? If they're FCA regulated by a tier 1 company, then that's all that matters. Right, for me, I recommend looking at brokers like Pepperstone, IC markets, I'll have a list of brokers and stuff like that down below. But for brokers and stuff like that, don't worry. Make sure you just check that out. You know, there's some different things you can look at. You can check out the customer service. You can check out the security of it. You can check out the regulation, the fees, the swaps, the spreads. But don't worry, I'll do all that for you and put some broker recommendations below. There's over $6 trillion traded a day. It's becoming more increasingly popular and popular every day. You know, it's not a scam. I just put that on there to try and clickbait you guys. But I'm sorry about that. But it's not a scam. Don't worry. You know, don't get me wrong. The markets are rigged. So in that essence, yes, it can be a scam. I view it as a scam, but it's not. There is obviously profitable traders, which is awesome. For me, it's all based on probability. If you try and stack the odds, right, it's going to go in your favor, right? So if you, for example, have market structure in your going your way, for example, you're looking to buy, you have a bullish market structure on all time frames, you have a nice confirmation entry on a low time frame, you have a nice bullish engulfing, you have a nice let's say demand zone to buy from, right? The market, the probability is in your favor. But if you're trying to buy within a bearish market and you're buying at a supply zone and you're buying when only a couple time frames are bullish and the other high time frame is bearish, well then it's not going to really work out because of the probability. Okay. Again, it's controlled by computer algos. It's 100% true. The best and brightest, smartest people in the world, and yeah. However, don't get me wrong. With a proper trading plan and proper execution, there is obviously ways of being profitable in a market, right? And obviously, in this course, we're going to be showing you how to be profitable. You know, I'm going to help you find your edge because everyone has their own edge. So yeah, this one has sort of been the market basics. I'll write some things down below this video as well, so make sure you do read that. I'll put in where I get my news from, where I check out the fundamentals, where I do all my charting, the brokers I recommend, and just stuff like that. Okay, as for news, I always, at the start of your trading day, you must check for the red news, so the high impact news. And I recommend using Forex Factory because that's the one I use. You type in forexfactory.com/calendar and I'll put the link below. And you can use other websites like MyFXBook. Even if you're funded by FTMO, they have their own little calendar, and loads of other websites as well, like News Now. They all have different fundamental sources, but for me, I don't like to go too much into fundamentals. I used to trade based on fundamentals and break and retest, you know, but that was factoring in fundamentals. So I am very well, I'd say, knowledge in the fundamental section as well, the technical analysis. But nowadays, I like to try and keep things simple. I like more time. I like to trade only a few hours a day, and that'll be my work day. Job done for the day, you know. So at the start of your trading day, make sure that you go out and check out the, you know, for high impact news. Just write it down in your notebook at what time it's being released. And you know, I don't recommend trading the news. It's obviously higher risk, and it's obviously protecting our capital is the number one goal here. You know, it's how we survive in the market. You know, for example, if you're in a position beforehand and the news is being released, then you need to take some risk off that trade, right? So, for example, take partials, move your stop loss at break even, and stuff like that. And like I said, I'll go much more in depth about this later on down the line. But I feel like when you're trying to trade news without knowing anything about the news, it's just gambling. So if you are in a trade, so for example, you bought pound yen at 8 o'clock and at 12 o'clock there is some huge fundamental high impact news coming out that's going to affect this pair potentially, well then you can just take some risk off that trade, take partials off the trade, move your stop loss somewhere, and if it goes the opposite way, well then it's going to stop you out wherever your stop loss is, and you've already secured some partials. So there's so many ways around it. But yeah, as for broker selection, like I said, I recommend a few brokers, and I'll put the links below. I also recommend checking out TradingView if you haven't already. I'm sure you probably have, for doing all your charting. I'll show you everything on what I do is. So pretty much what I do is I do all my charting analysis and stuff like that on TradingView. But when I go on to, let's say, to place a trade, excuse me. Oh, when I go to place a trade, I quickly do my analysis on the MT5 app, which I've downloaded on my computer. Just because obviously different brokers, they have their own slightly different price quotes and stuff like that. So if you're trying to trade from a demand zone on TradingView, and then you go into your broker and a demand zone is extra, not even like less than a pip closer, well then you want to trade from that one, right? So you just quickly do the closest supply demand zone markup that you're looking to trade from, right? But I do recommend checking out the paid versions of TradingView. Like I said, I'll put all links below. You can click on them, you can check them out. Some of them may be affiliated, and that'll help support obviously the course and the content that I'm putting in, new equipment and stuff like that. And just because the thing is, with the money that I get from, you know, mentorship and memberships and stuff like that, I'll be real with you guys. You know, I put it literally back into the company, and I want to start when we start getting a bit bigger. I do want to start hosting these group calls where I can start to do giveaways, right? And you know, I'm not one of those people on Instagram. You don't see me going out all the time. I'm not really like that at all. I don't see the plus in it. I don't like going out. I just genuinely have a passion for trading. I just absolutely love doing. So everything that I get, I put it back in for you guys. Okay. You know, it made me laugh actually. There's this. I'm not going to mention any names, but there was this trading guy, and he was quite new to Instagram, but he just completely smashed the Instagram algorithm. He was posting twice a day. He's very active, and I don't even know if he's a good trader. I'm not going to speak up on it. You know, I recommend to do your own due diligence before even looking at any traders to buy the course or whatever, right? That's why I'm really appreciative of you guys who come to me, because you've obviously come to me for a reason, which is awesome, right? But there's two of them, and he pretty much blew his page up on Instagram, right? He had over 100k followers at this point. And at this point, yeah, when he had over 100k followers, right, and it was within such a short time, and you could see the posts and the stories that he was putting beforehand, you know, like his setup and stuff like that, and the things he was posting was so much different to when he had 100k followers, because you got to think, right? People signed up to him. He's making more money than he is off his own trading, and I think that's sad. And I think people who don't, you know, for example, like me, I've been trading so many years beforehand before even making a course, right? But these people, they probably come into it for a few months and they made a course, right? So look who you're signing up to, I guess. But you know, these guys, they were literally posting stuff when they'd go out. They wouldn't be in these posh places that they are now because of the memberships that they're getting. So they're making their money from these memberships. And you know, like I said, you can check out my Let's Talk section. I go in, it's sort of like a solo podcast, but it's not. They're not long videos. Some of them may be long, but I talk about things that, you know, for example, social media being toxic. I talk about things that I've learned from being the trader, and mistakes that you can not do, if that makes sense. So definitely recommend checking out. You probably have already seen it anyway below or above this course. It's there somewhere. It's called Let's Talk, and you can check that out. But yeah, I only recommend moving on. Sorry, now trade one pair, right? For me, I have two pairs, so for me saying that, I sound like a bit of a hypocrite. But the reason why I have two pairs is because I have a ZCFX method, which I put at the end of this course, that I trade only pound yen for. But the one pair that I do trade mainly is your dollar, right? And that's mainly whatever session it is. It could be London or New York. But for pound yen that I trade, that is for something completely different to how we're trading this, right? But yeah, I only recommend trading one pair, especially if it's something very liquid like your dollar. You know, that's going to require less stops and stuff like that. You know, it's gonna be, it's a major pair. It's much more liquid. It's a lot of volatility in it. It's all you need, right? The one pair is definitely all you need. You know, as BFI traders, or so, you know, BFI stands for Bank Financial Institution. We look for very intricate details that require a lot of focus, right? So one pair is fine, especially when you're starting out, right? Once you're profitable with that one pair, yeah, you can go on and move on to the second pair, the third pair, whatever. But just try not to have so many different pairs, because if you look at my watch list now, right, even though I've got a couple of other things on there that I forecast, my only two pairs that I actively trade are these two pairs here, right? Going back years ago, I used to have like all 28 currency pairs on this list, and I used to flick through them, look at the 4-hour trends, put them into sections and stuff like that. Don't get me wrong, I was profitable, but it was so much noise thinking about it now. Because with one pair, you start to get used to the characteristics of that pair and the personality that it provides, because they all have their own different things. For example, pound yen, I prefer to trade the London session, and euro dollar, I prefer to trade New York session. I'll talk about trading sessions and stuff like that later on, but just understand that one pair is definitely all you need, right? And definitely any of the US dollar majors, right? I would say the easiest pair, obviously the best spreads that there is out there in the markets, is definitely euro dollar. That's why I recommend that pair, just because it obviously has tight spreads and the high volume. It just respects our trading system the best, right? Which will obviously give you the confidence that you need, especially if you're just sort of starting out. But yeah, I'll put some links below. I'll put some things below that you can definitely recommend. But word of advice, as you go into this course, obviously we need to sort of reprogram, rewire your brains with these obviously good habits, and just replace them with the old habits, bad habits that you used to have. Definitely mindset is it's the most important thing to me in trading. It will have a huge impact on your trading. The discipline and the practices taught throughout this course, which I'll be explaining, must 100% be followed. You can't just learn and not put it into implementation. You have to practice it. Once we learn about, for example, order blocks, go straight on the chart and try and mark up your order blocks. Don't spend too long on it, right? Spend about 10 minutes on it, 20 minutes, and just mark up every single candle. And just think, okay, which one price are you reacting to? And you start to become familiar with it. So you need to reprogram your mind to see it. So once you train your eyes, that's when you become profitable, right? Because I can show you how to trade. I can show you the way. I can lead the horse to the river and show him where to drink from. But you have to practice what I'm teaching over and over and over and over until you have reprogrammed your brain eventually, right? Again, it's like I said, if I can show a horse where to drink water from a river, but I can't tell him or teach him how. Well, I can teach him how to drink the water, but he isn't going to do it unless he wants to do it. So he has to do it. Like, I can show him where the water is, but it's up to him to drink the water or not, essentially, right? But yeah, that's sort of been the market basics. We'll go on different things later on down the line in the course. I'm not going to go into the basics where I teach support position, trend lines, pips and stuff like that, because we already know that. But in terms of pips and stuff like that, what I would recommend is when you enter a trade, you must obviously account for the spread. So if you're entering a trade on your dollar and the spread is, let's say, 0.3 pipettes or the 0.3 pips, so 0.3, add that spread difference to your stop loss for sales, and add the spread to your buy pretty much front running the order just slightly to ensure that you actually get tagged into the trade. Because I find a lot of people, when they're looking to buy, for example, or sell, whatever, they'll get stopped out the trade. Well, not get stopped out the trade, but they won't get tagged into the trade because there's that slightly 0.3 pip spread, or 0.2 pip spread, 0.1, whatever. So make sure you factor in the spread as well. If you're on a low spread broker, then obviously it's going to be easier. You're going to get those tighter stop losses, but make sure you factor in your spreads and stuff like that and add it to your entry and even your stop loss as well. But yeah, we're going to end the video here, and what we'll do is we'll jump onto market structure, and then after market structure we'll start to jump into the order blocks and supply and demand things, and then after that, that's where it gets really intense, guys. Okay, so thank you for watching, and I'll catch you on the next one.